Hello, good morning, everyone. Nice to see. I think we got late, so some of them left the room, but hopefully they'll come back when they hear the noise and the discussion. So, thank you all of you for being here and inviting all of us to discuss one of the, I think, the most uh, talked about topic about building for Bharat, and I think it's very crucial that VCs and startups work together towards building an ecosystem together. And I have two brilliant panelists with me today. Interestingly, one is like a pure play VC, and then we have a strategic investor in the form of a family office. So I think the discussion will be really, really amazing, and I'm privileged to actually have both of you here. To quickly, have for the audience as well, can we do a round of introductions about the fund and what have you invested so far? Can we take Vishal? You can go first.
Yeah, sure. I am from Ankur Capital. So we are a early stage investment firm, been in the space for the last 10 years. Uh, is it better now? Yes, yeah, sorry. I was just saying that I am from Ankur Capital. We are an early stage investment firm, been in the space for the last 10 years, deploying from our third fund right now. Typically, we are a sector agnostic fund, but what we invest in is an India first or an India focused opportunities across agri, fintech, health, education, manufacturing, and few other sectors that we think have a lot of potential for the Indian market, primarily focused on tier 2 tier 3 markets as well, right? So what we like to do is that we like to look at value chains which are digitizing. There is a lot of new data coming up, there is a lot of new technology products which are entering into those value chains, and we like to see what are the inefficiencies in those value chains that startups can come and address. So to give an idea, we have invested a lot in the B2B supply chains, in fruit, in seafood, in food manufacturing, value chains, because we just thought that there is just technology can address a lot of inefficiencies there. We've also done a lot on the financing and insurance side for a lot of these value chains as well, because with the new data, with business getting digitized and new data coming up, we always believe that that's the best financing opportunity that someone can actually go after, or a insurance opportunity someone can actually address. So that's broadly what we kind of do. I have been in the startup space for a long time. I was a startup operator before joining Ankur Capital, but primarily focusing on fintech and agri investments. Looking forward to sharing our thoughts, meeting people, understanding more about the space as well.
So I'm Jain, and I'm a CS LLB by qualification, but as an investor, I'm an investor by profession. So I'm not a typical VC. I come from Nanda group of companies. So we are a conglomerate of, you can say, 40 odd companies. We are present in different sectors, which is textile, agri, fintech, real estate, mining. So I look after mining, but then we started our family office a year and a half ago. For the sake we actually wanted to have our investment in those companies which are coming up with new ideas in the form of startups where we are already present. So we are present from last 40 years. So we wanted to actually help those startups with our expertise. So we started this VC family office. And then we also came up with an NBFC. So this Nanda Fincap is an NBFC where we are deeply present for rural MSMEs and all other partners in the ecosystem. And in a span of, you can say, 1.5 years, we have invested in 13 plus portfolio companies of ours, which are so we are sector agnostic. So they are in food, agri, fintech, edtech. Also, one is our media channel. So these way, we just wanted to help and also share our business expertise, which our forefathers we have developed in last many years. So that way, we kind of trying to mix VC and a business perspective in the form of a family office. Thank you.
Thank you. Thank you, Ridhim, and thank you, Vishal. Very, very interesting perspectives. And there is something that I would want to address from a shift standpoint to begin the conversation, and I think set the context here. So, I mean, India is known to be an agricultural state, right? And the rural population is 65%. But still, okay, only 20% of them get formal credit, right? That is, I think, the bigger question to be answered here today. And I think over the next questions that we take forward, we will talk about how the credit system, the lending system in these MSMEs and rural fintech is making a change and enablement. So, what is this major shift? Okay, there's a huge gaga about India first, right? Build first, build for Bharat. And also, India is no longer become a story that is running in the back seat. It is become a global stage for a lot of global investors also. So, what is the shift that you are seeing? If you can take this question and then we can move to Rhythm, where from a startup perspective, the new startups that are coming in, what are the sectors that you're looking at? And is it really creating that kind of empowerment? Where are we in this shift? If you can take that.
Understood. I know that's a great question, like in Mansi, and I think that's a great way to start off as well, right? So, what I would like to do is that maybe I will start off by talking about a portfolio company of ours that we have just recently invested, right? So, as I said, like we have been an agri investor for a long time, so we always wanted to take a bet in the dairy value chain because that's like a massive value chain in India, and we thought like that's somewhere we want to see like do an investment in them. But we spent like almost like 9 years looking at the value chain, but never really built conviction that like there is an inefficiency that someone is kind of solving, and someone can actually solve it in a very scalable way. But recently, what we realized is, it's especially post COVID, like dairies have done an incredible job in India in digitizing their entire value chain, right? So today, like every farmer has a milk passbook. Payments are done digitally, come directly to their bank accounts, etc. So when we saw this change, we saw that like there are two things: that the sector is formalizing, and secondly, there is a lot of new data coming up from the dairy value chain as well. So that gave us the confidence to actually go after seeing, okay, what is the opportunity that you can actually build on top of this, right? At the same time, what we have seen, especially on the farmer side, that difference, the change in mindset that we have seen, is that farmers no longer, like initially they were actually willing to take a lump sum money and use it for any use case. So that's why MFI business has kind of grown really well in India. But now they have reached a stage where like they are okay with a lot of restrictions on how you use the money. Like you would actually have to buy an asset, or you would actually use it for a specific purpose, as long as they get access to more capital, because they want that extra capital to kind of like really push their like income levels higher, right? Because they are not really satisfied with the MFI level of like capital they are getting. So when we saw both of these things together, and we came across a company called Saswat Finance, who's kind of just building exactly at this juncture, is someone where like we thought, okay, these are the two major wins that we have seen in the like in the ecosystem. So investing in like Saswat Finance makes a lot more sense now actually, right? Because the farmer's mindset is changing. They want more capital. They are willing to actually work with a startup like Saswat to make sure that the capital is used in the right way and it's not being diverted for other purposes. At the same time, we also seen that there is a new data coming in that you can underwrite a farmer like better. You can actually like go this thing, and a similar thing is happening not just farmer. Similar thing is happening across like rural micro manufacturing is something I'm very bullish about actually, because that's a segment that's been growing really fast, and it's also they're coming a lot into the GST umbrella, so that you can actually get a lot more data about that business that you can use to underwrite. So we're also looking at inefficiencies in like there are large pools of capital, like and then there is these rural micro manufacturing units. So how do you bridge that gap like between like both of them is like something that we are seeing as well. So yeah, from a trends point of view, these are I think the few things that we are seeing on the ground.
Yeah. For the audience, do you want to tell what Saswat does?
Oh yeah. Saswat, like finance, for example, is solving this precise problem. They actually started with the dairy value chain, but their focus is they want to bring financial last mile delivery of financial services. This includes financing and insurance products for income generating assets, right? So if you're a farmer who wants to buy more cattle, if you are a rural small business owner who wants to set up like in a shop or expand, if you are a rural micro manufacturing unit who wants to add more like in manufacturing capacity, etc., Saswat kind of comes with like the financing and the insurance products that you need. So just bridging the gap between where the product is versus where the customer is on the ground.
Thank you. So, Rhythm, same question, but a little different. Nanda Fincap is, as you rightly said, a conglomerate of various MSME businesses, right? And these are, in India per se, they run on trust, right? MSME businesses have been legacy businesses and run on trust and very informally. So, what shift you have seen from an informal setting to a formal setting, and with the technology adoption, where do you see it growing, and what are the advantages that will help the ecosystem to grow?
See, there is definitely a big shift from the informal lending, and now it is getting formalized. If you see the Udyam portal, which is so, I think more than 60 crore MSMEs have registered on Udyam portal, which itself is a proof that the formalization is happening, digitalization is happening, and also the people who were more convenient for informal lending are coming up in the form of maybe NBFCs or ecosystem, working with ecosystem partners to formalize their lending, and also with data and the startups coming up with data driven approach, and those who are, for example, earlier we were more focused towards credit rating and the collaterals. Now we are looking for the cash flows, and now we are looking for what you can say, the exact numbers. So that is what giving us trust as an NBFC. That is what giving us trust to the people who are lending, that okay, the numbers are showing it is a real revenue which is coming, instead of just a trust factor that okay. So yes, formalization and along with digital approach, as we have seen that now even a bhajiwala is having a digital payment with them, and with e-mandis and etc. So farmers, MSMEs, rural agri businesses, they are coming up with coming upfront for the formal lending, and people are also willing to have incorporate themselves for such formalization.
Oh, great. I totally get the data part of it and the trust that it, and NBFC as you mentioned, cash flow based lending. It's opened up, and I think definitely it creates a lot of empowerment for MSMEs. So you mentioned about Saswat. You also have Cropin. You also have Rupify and Big Hath, right? A span of portfolio across various parts of the value chain, right? So if I were a startup, okay, and I come to you in this one of the value chains that you invest in, what are the 2 or 3 metrics or signals that you look at primarily from a scalability and unit economic standpoint? What would you do compared to the way urban markets work and rural markets work? The approach is very different. So what are those 2-3 metrics that are really, really crucial for you?
Yeah, I think for us, one thing is that we bank a lot on again, going back to digitization and the opportunities that digital technologies operate. So we like to see that is there any new data, new sort of information that's coming out from the value chain that you can actually build on top of. The other thing that we also like to understand is what is that inefficiency in that market that you are going after, and is it a large enough inefficiency? So it could be inefficiency in terms of market linkages, output market linkages, or supplying of inputs, or supplying of finance, etc. What is the fragmentation in the current market right now? So if today, I was speaking to this company which is trying to actually bring affordable housing to the tier 2, tier 3 and rural India, right? And there, the statistic that kind of blew my mind was that 80% of a lot of these applicants drop off when it comes to affordable housing, because these are actually small houses that you are building. But instead of going, the friction in the formal process is so high that 80% of them drop off and move towards actually using their own capital or maybe borrowing from informal sources in bits and pieces to kind of do that home building or home improvement, etc. Right? So there's a significant inefficiency in the market there that you can actually address using tech, using data. And since we are an early stage investor, a lot of our bets are on these. So if it's a large market, significant inefficiency, but then there is a new data that's coming up. I think if all three kind of align, then that would be a space that would be very interesting for us, to kind of invest.
Awesome. And if I come to you, okay, so the way I went to them, there are two parts to this question. One is being a strategic investor in a family office, right? What do you see that a pure play VC doesn't see? Okay, that is something that I would want to know. And second is what value add versus why do I choose you versus choose Ankur, right? If I have the power in my hand.
Okay, so see, we come from a business family. We have done business. Then we started a family office. So I would, why am I emphasizing more on it? Because we have started businesses and then we have scaled it up. So we know the nuances and we know what are the problems which we have addressed while building up these businesses. So if we are investing in somebody, it's not purposely and purely for the funding. We actually invest in someone if we can help that person with our network, which we have built in last many years. And with that, you can say with that wisdom, which we have gained after making the mistakes. So yes, the first question is, you asked that what is the advantage over a pure VC? So the advantage over a pure VC is the expertise of that business where a startup is entering, and we are already being present in that sector from many years. And the second is, why would you choose a family office over a VC? So that's because, of course, VCs do have their network. They do have a penetration in the ecosystem. But I think family offices have a little deeper level of penetration in the ecosystem. They have a better market access. They can give, and plus there is always a synergy. So whenever a family office invests in any startup, so they look for synergy first and then the investment. So before being an investor, we would definitely be a customer, probably. So that is maybe the advantage.
Yeah, and also specifically when it comes to the MSME segment, I think the mindset alignment and the way founders need to think is where I guess a family office will add much more value.
Yes.
Because the way the market is MSME is a very, very different market when it comes to a pure play SaaS or a pure play tech company, right? So I guess definitely.
Yeah, and whatever there is, what's happening on the ground, like while you are executing something, is always different from what you are being guided.
Absolutely.
So
Absolutely.
that way.
And just to add, to that same point, because I speak to a lot of rural entrepreneurs who are coming up, right?
Yeah.
One thing I always feel I think for even probably half of them, I would ask why are you speaking to us?
Right. Yeah.
But I think one gap that I do see in the ecosystem is that a lot of them are incredible businesses, right? Great businesses. They will actually become profitable very fast. Okay. They would need small injections of capital every now and then to kind of sustain. But one thing I realize is that not all of them are venture scale businesses, because venture capital thinks differently. Because as a detriment to myself, I'm just saying I do think that there is a capacity building that needs to be done in rural entrepreneurs to kind of figure out what are the different sources of capital that are available to me, and how do I make myself the most attractive company for that capital, right? Is it, if it's MSME loan, or is it a blended finance? Is it debt finance or revenue based finance? So what are the different sources of capital that are available to me? And then that capacity building to make yourself the most attractive company to actually go after that capital. Correct. I think that is where a lot of rural entrepreneurs, in my opinion, kind of struggle today, and I think that is something that kind of needs to be addressed more institutionally in that sense.
Right, absolutely, I agree. And also taking a piece from there, what you said, right? Especially from a distribution standpoint and the business model standpoint. I'm going to go back to your portfolio. You have a SaaS company in Cropin, and then you have a buy now pay later company in Rupify, right? Both models very different. A lending business versus a SaaS business, right? In fact, a recent EY report also mentioned that India is the funding is very, very trending towards these two models. One is the SaaS companies building fintech models for MSME, and MSME credit lending, digital lending, right? So how do you look at both of them as individual business models, and how do you think they are different when it comes to scale? From an investor lens, how does scale look at from here, whereas how it looks in the lending space? Can you maybe give 2 or 3 pointers and highlight the distribution side of it, because that's the most important?
Yeah, no, I think for a SaaS company, obviously, you are basically building an enterprise SaaS product, which all again goes down to what is that solution that you are kind of bringing on board. Cropin, for example, is great about digitizing farms.
Correct.
So for large MNCs in the world who want to understand more about their supply chain, who want to actually track their supply chain and predict the risks across their supply chain, etc. Right? So they have figured out that this is a problem that enterprises are facing. A lot of it is being done in pen and paper and very manually right now. So they moved to kind of address that, and they have done incredibly well globally. Today, 10 million acres of land, etc. So they've done incredibly well on that front, right? So when we look at kind of SaaS company to kind of come into this space, it's about again there's a supply chain that needs to be kind of formalized. How are you kind of formalizing, and the most important thing is how are you building data, and how are you reducing friction in the entire supply chain actually through your SaaS product. So I mean, since you mentioned about metrics, what we like to see obviously is you actually have these large enterprise customers who can actually give you $1 million ARR to kind of get these things, and also you are getting their recurring business because you are continuously adding value to them. It's not like a point solution that you are doing. That's on the SaaS front. I think on the financing front, what we would like to see is one is on the distribution, because financing distribution is hard in India, and it's very costly to do that. So how have you figured out a new distribution system? Rupify does a great job in terms of anchor-led distribution. So they work with anchors to reach out to retailers. Saswat does a good job in terms of working with the on-ground village level entrepreneurs to kind of reach the last mile. So what is that new distribution innovation they are bringing? And obviously, I think post that it's all about how do you make sure that how do you underwrite so much better compared to anyone else? What are the data you are using? So we like to go deep into understanding the data, the risk management metrics that you follow, etc., to keep your risks low. And eventually, the most important thing in any lending business, I would say, is collections.
Yes.
So how do you manage collections? What part of them are digital? What part is cash? How do you reduce the dependency on cash, increase digital, and how do you make sure that automatic collections are happening? So those are some of the metrics that we like to look at when we are seeing some of these businesses.
Right. Taking the underwriting bit, and I'll come to you also on that. Right? No, a farmer, okay, typical profile, doesn't have any formal credit history, right? And I know there is this story of, using satellite data, using digitized data. You mentioned about passbooks, dairy passbooks, supply chain analytics, a lot of asset-backed digitization is happening. All this data is definitely something that you can ingest and figure out a way to underwrite. But on ground, right, is it really, really something that is a hype, or is it actually something that the data is helping towards underwriting the MSME credit? Or are we just right now at a playground where we are experimenting? What is the real scenario right now?
No, the real scenario is definitely it is helping. I think we could do a lot more. Obviously, like if you talk about a Rupify or a Saswa, they are platforms, they are tech platforms which are kind of bridging the gap between capital and the borrower. Now we are getting a lot of data from the borrower side, but the capital partners also need to get a level of comfort with that, like data, with that underwriting, etc. So that part for me has been little slow in terms of the innovations that happen there. So you still need to manage both sides. There are capital partners out there who are incredibly fast, like Shivalik Small Finance Bank, RBL, etc. They do great job. They are willing to take on more alternate underwriting mechanisms, the information that you would actually provide, etc. So I think it's just finding the right capital partner that allows you to innovate a lot on underwriting, even more actually. So I will also give you another portfolio company of ours called Ibiza. So what they do is that they develop parametric insurance products, climate insurance products for farmers, agri industries, and everything. So small products, similarly, like if the rainfall exceeds certain amount, automatically payout happens because there is a loss that is estimated to that climate event happening, right? Or excess heat, then there is a payout that happens to you, etc. So this is a classic case of using climate data to underwrite that risk. But also what we are seeing is that globally, insurers and reinsurers are very happy to kind of accept that data, accept the risk that Ibiza is actually being able to underwrite, and then underwrite that, issue that policy as so. I think it's finding the right partners in the background that is actually most critical. Knowing the landscape, who is the most enthusiastic about this, and kind of working with them. I don't think it's a hype. It's a clear reality, but the growth of that will actually depend on the partner that you are getting in the back end.
Correct. Coming to partners, you are a partner and an aggregator of multiple loan providers, right? How have you seen this entire underwriting innovation? Is it moving at the pace that it should, one? And also from a customer standpoint, the customers who come to your platform to take a loan, right? What are the 3 or 4 main products that you have seen that they sought for and they are not there? They are missing. Is there a gap there which between the underwriting innovation and a capital partner can be solved to ensure that the right kind of distribution is happening, one, and there is actual empowerment or enablement that we keep on talking about is actually happening? So what is the insight there?
So see, yes, I agree with you that definitely the data is helping. What we are looking at, that this is not just the hype. Of course, it is helping both the provider and the lender. But of course, there is a scope of more disruption and a human touch, or you can say the trust building that has to be there on the part of the lender. So we have to do our due diligence with respect to the lending. We just cannot totally purely rely on the data which is coming up either by any startup or any company, which is just, so we do our due diligence with respect to that. But of course, there are ecosystem partners who we completely rely upon. So, for example, there are companies like Credit Heart, Sarthi, etc., who are directly involved with the farmers. So, on that part, we are a bit relaxed that we need not to have that kind of an expense to just to have due diligence on that part. But yes, there is a scope of disruption, of course. And with respect to products which you have asked for, so I think people come to our platform mainly for working capital. And what kind of what I see that we see that there is a grocery startup called Blinkit which delivers you in 10 minutes. For loan, you have to have spent, for example, if you're coming for a working capital, it will definitely take you a month or so. So it will surely impact. It will slow down the process for that farmer who is in need of that money, or the MSME who needs a working capital. So I feel that there is a gap where we can disburse loans, not in the minutes, but at least in in a day or two. It's a risky thing, definitely, because money is involved, credit is involved, and we have to check the credit worthiness, of course. But if any startup is coming with such kind of a disruption, that is what I feel is rather than products that what a person is looking after, early disbursement is what I feel should be the focus.
Awesome. Loan in 10 minutes. That'll be the
Yes,
next.
maybe.
Maybe after 5 years, we look back and say,
No,
we
actually-
never thought this happened, right? So,
In a way, I mean, personal loan today is actually being done in
yeah,
10
it's done
minutes,
in
right?
10
So
minutes. Yes,
it has seen
absolutely.
incredible end-to-end digitization.
Correct.
And I do think more and more products can actually go down that route. And, I
Definitely.
definitely agree with Rhythm, right? That is something that I'm also very excited about because
Mm-hmm.
the cost of servicing a loan in India is just too high to make a lot of these loan products viable.
Correct.
For a lot of them. So I think there is a lot of innovation that people can do there as well. And we have proof point in personal loans. So
Definitely. Before I go to the next section, which is purely about funding and exits, now the hall is full, so we'll take a round of raise hands. How many of you are startups building in the rural fintech space? Okay. Oh, wow. Nice. Hopefully somebody will write a check. How many of you are lenders? Anyone in the NBFC lending, digital lending space? Okay. Anyone building an MSME business and wants loan? Oh, okay. Fine. Okay. I'm very curious to know who else is interested in this panel discussion. But thanks for coming. So, okay. But we will still talk about the funding challenges and how VCs and investors look at it. So, you write anywhere between 1 to 2 million, and you also have a buffer for follow on, right? For people who just entered the room, giving a background, Ankur Capital is a VC primarily focusing on agri impact fintech space, anything that is to do with building Bharat or India first models. Whereas Rhythm Jain, she's from Nanda Capital, and they are primarily an aggregator of loan, but also a VC arm which strategically invests in companies that they have business acumen in. So just wanted to make sure that the audience knows what we are talking about. So again, coming back to you, so you typically come in with a million or 2 million as a first check in a business, and then you have some buffer kept in for follow on as well. So when it comes to the rural fintech or the agri-tech space, when do you decide to double down? Do you have a benchmark that is set in saying that, okay, now is the time for that hockey stick growth, and now is when I will come in? Or maybe I need to support this startup much more because it is in a space which is different from what the actual space is. And should I double down now? So, what is the approach that you take?
yeah, so I mean, ideally we would like to invest in a company when we think the hockey stick growth is going to happen in the next one and a half year time frame. Obviously, we base this on some of the market assumptions, some of the investor conversations that we have with industry experts, etc. But obviously they also take time to realize, right? So in addition, in the same agri space, we also do deep tech investments as well. So we are invested in String Bio, which is which develops biostimulants that will go into fertilizers, animal feed, multiple of these things. But it's a IP led company, so they took around 3 years after our investment to kind of finish their IP development and go to market. So these are some things that we do underwrite when entering. But yeah, I mean, when it comes to actually looking at follow on capital, what we would like to see is that at least the entrepreneurs because from a seed, when we come in seed round to a series A, we want to see entrepreneurs grow a lot, that they have actually figured out more about their ecosystem, what their actual product is going to look like, where their positioning is going to be in the market, what the pricing is going to be, and how they are going to grow. I think a lot of these things would need to be kind of figured out in that 1 to 2 year time frame between seed and kind of series A. And obviously it's also in our inherent interest to kind of make sure work with them very closely to make sure that they actually reach that stage. Or if you're a technology like an IP led company, like we invest in them at TRL 5, like halfway
Correct.
through their IP
Yeah.
development. So have you progressed to, let's say, TRL 8, TRL 9? Like have you actually validated, done some pilots, validated your product in the market? Do you actually have some inbound interest in your products, etc.? So some of those softer elements, I would say. But yeah, I mean, for us, it's all about the soft elements more than hard numbers, for us to kind of take a bet on, I would say.
Oh, got it. Got it. Nice. And for like, what is the kind of stage and ticket size that you would want to come in when you are evaluating a startup? What's your funding strategy? And do you see acquiring them? Is that one of the, I would say, one of the areas that you would want to? I'm not saying you will. Or do you see growing together as different business units? So, what stage and what kind of check size that you would like to write?
See, we decided that we prefer to enter early. So yes, early stage is what we prefer. But if it is not early stage startup, but it is a promising startup, and if we see that yes, our fellow investors who are very sure of that startup, we don't mind entering. But as our thesis, we enter early, and the check size which we have kept is approximately 1 CR to 8 CR. But double on, I mean, the follow on investment definitely depends upon the promises, or maybe it depends on the milestones which we have thought
Agreed
of,
upon.
maybe a customer acquisition or some tech development. Or any new disruption which that startup is doing, and we find it promising, then we'll definitely go for the follow-on investment.
Awesome. Yeah. Taking one thing, you said you focus more on the softer aspects, okay? But being a VC, it is also important for you to give exits to your LPs, right? And being an impact fund also, because it is a mix of exit, sustainability, profitability versus creating impact, right? You have to balance both of them. And having LPs, the ones that you mentioned earlier, how do you look at the exit strategy? I'll break this down into two parts. One is from a financial, commercial, profitability standpoint, right? Exits to your LPs. And second is, how do you make sure that you also balance the impact side of it? Since you are doing rural fintech and the whole idea is to create new markets, a startup going into an area, okay, digitizing the whole space and ensuring that there is impact and empowerment happening. Is it really happening? Or are we just going around the same data that is still there? So how do you measure impact? What are those parameters? And how do you also ensure that there is scalability so that you have exit for the fund as well?
No, I mean, that's a great question. I mean, it's actually the problem that you're trying to solve, right? You're trying to balance capital returns that you can give to the impact that you are creating on the ground. And it's been quite an interesting journey for us to kind of figure out how do you balance both. Obviously, to give an idea, a third of our portfolio companies are global companies now. They scaled from India across countries, while creating substantial impact in India. So we have a framework in which we track the impact that they're creating on the ground on a 1 year, 3 year, 5 year basis. We align with them on day one when we invest actually. So we have a very clear impact framework that we align with them on, and then we routinely keep tracking on how they are performing. Obviously, sometimes they pivot, sometimes they change the business model, but the idea is that the core customer that you're trying to address, are they still actually being impacted on the ground? So we have that thesis in which we manage. Once that is done, I think the question of capital returns kind of comes into place. And when it comes to capital returns, what we think at least would work very well for this type of businesses is that you need to build it sustainably. You need to build it profitably and sustainably, which means that you need to make sure that you are getting if you are a, let's say, market linkage company, we want to make sure that you are actually acquiring the farmer and you're actually acquiring the the buyer on the other hand, right? It's not like a trade that's happening, and then you are kind of getting it on your books.
Correct,
You're
correct.
getting into a financing kind of play,
Correct.
but you're actually doing this on the ground. So
Correct.
we have we work with the portfolio companies to make sure that they're actually doing this, because that is an asset that they're building, which will
Right.
give them dividends down the line, and which will give us returns, because that will build a very sustainable business. So when we think of investing in one company, and when we say, okay, we want this company to be a sustainable business which will give us an exit, we like to identify what are the assets you need to build. Is it a
Absolutely.
collections as an asset that you need to build? Is it acquisition of farmers as an asset? Acquisition of buyers as an asset? So what are those assets that you need to build in your business, which we think will translate to the outline? So, and the way we work with our portfolio companies is to make sure that you're continuously building those assets, and continuously leveraging them to grow your business
Correct.
on the line, actually. So that way we kind of manage the both scales, because both are really important priorities for us, and it's very important for us to manage on both sides.
Correct. Rhythm, coming to you, right? You day in and day out disperse loans, right? Again, coming to the impact side of it, based on the data and the insight that you have, and the wave that we are talking about, where we are seeing rural fintech digitization, more farmers are getting loans, more people are getting access to money. For MSMEs, it is becoming easier to get working capital. Is the reality so that the pie that we were talking about earlier from a formal credit standpoint, has it really increased? Or is it still the informal loan mechanism that has moved to formal? Or are there really an undeserved market which was not getting loans before, is getting it? And is there a gap that still needs to be addressed? I think we are there, but there's a long way to go, or are we already there, right?
No, of course, there is a gap.
Mm.
There is an unserved section which is there. I mean, you can say based on the credit worthiness or the credentials or the credit score, whatever we say, there is an unserved section which needs to be catered. But of course, the pie, it's been increased, it's been dispensed off. And if we see the MSME loan, as far as as far as my knowledge is concerned, so I think there is a 15% year-on-year increment in the MSME loans in the rural section. And as I've told you, that more than 60 crore MSMEs have already registered on the Udyam portal. And we know that if they are registering on the Udyam portal, there'll be formalization of the loans, and they will be eligible to get loans from the NBFCs, from the banks. There are different partners in the ecosystem, say banks, say NBFCs, different startups who are working as fintechs and who are ready to help them with providing quick loans. So they all are working together to get that. It's not just a legalization of some informal lending. There is formal lending happening in this sector. But yes, there is a gap, and it's been started, but surely we will be there. I mean, that unserved section will definitely be catered to.
No, absolutely, I agree with you. So if you both had a magic wand, okay, because we want the pie to increase much faster, what is that one thing from an ecosystem support standpoint, whether it is a policy, whether it is government support, whether it is more innovative underwriting partners, what is it that you would like to change to ensure that this entire rural fintech market that is opening up scales to a level where it becomes a mainstream VC private equity game, right? What would you do? What would you change?
Again, I kind of made the point earlier as well. I just think that there is a lack of capacity building for entrepreneurs to find out the kind of capital that they want, when they should actually get that capital, on how to make yourself the most attractive for that capital. I would say, like, again, just from a policy point of view, or like, from a government intervention point of view, I think that's an area that government should actually, like, focus on. Like, it could be like a simple digital education, WhatsApp chatbot way of communicating this to the, like, entrepreneurs, like people who are registered on Udyam portal. How do you actually build that capacity for them? Because I think there is enough pools of capital. Obviously, product innovation can still happen. Blended finance is still a very nascent segment. Catalytic finance, there's new way of finance that can happen. But I think just bridging the gap between what the entrepreneur knows about, like, the options that are available to them right now, to what they need to actually achieve to, like, get that access to that finance. I think bridging that gap is a very important part of just lifting that entire rural ecosystem, right? Because I do see a lot of the one thing that, like, we talked about is unserved segment, but there is a significant aspirational segment that's coming out of here actually, right? And it's very important to address the needs of that aspirational segment, because that's a segment that's going to build momentum into the sector.
Correct. Absolutely. Yes. Rhythm. What would you
I would
change?
say that there is a huge gap, and we need to bridge it by providing financial literacy. So that we were talking about that unserved section. That unserved section is because there is no penetration of financial literacy in the remote areas, and be it I mean, if we can just turn it out to be a vernacular gap maybe, but there is a scope of having financial literacy, first thing. And second, of course, the disbursement of quick loans. I mean, the quick disbursements of loan.
Yeah.
That is what I feel would change the entire picture of rural MSMEs and the rural fintechs. Because once you have the right approach, that what are you going to do with the money, how you get access to the capital first, how you are going to use it, disburse it, and secondly, how quickly you get it, will actually rotate economy in the right direction which we are dreaming of, because that's the only thing that matters, that how quickly you get the money and how quickly you dispose it off.
Correct.
So that's what I feel.
Absolutely. And I think my time is up. So do we have time for questions? Can we take a couple of questions? Okay. Yeah. We'll open it up for all of you. Any questions for the two brilliant panelists who are here? Or if you want to make a pitch. Yes, sir.
Hi, I'm Shyam from HESA, which is a social rural enterprise based in Hyderabad. So what we do is we are a B2B rural commerce and established on a footprint of, say, 8 states. The question is, while we talk of rural entrepreneurship, building SHGs, which is about women empowerment, and also the society for elimination of rural poverty also goes hand in hand. How do we see to it that the addressal is on a larger scale? We may do, right from funding the fertilizers, the pesticides, the seeds, financing to a buyback. We as anchor partners can do that, but for that we need a stable partner who will be ready to do that, so that we are able to scale consistently. That's the question. So it is MSME and SHG. I mean, SHG is what is all about micro entrepreneurs, as Vishal was mentioning.
No, that's a good question actually. I mean, scaling sustainably is actually a challenge that, like, that a lot of rural entrepreneurs do come up, right? Because if you look at India and if you look at the problems, like, that Indian rural ecosystem faces, they look very similar on the surface, but when you go deeper, they actually have an individual nuance to it actually. So what works in a certain area doesn't really work in another area, right? So there are very few solutions which can scale across. I think what, like, we would like to see is that, like, just identifying a solution that kind of scales across. Like, if it works in Maharashtra, does it work in Telangana? Does it work in Uttar Pradesh? And does it also work in Rajasthan? Where I think SHGs and, like, a lot of the social entrepreneurs kind of operate is at a slightly micro level, which makes it a very focused solution, right? Which is also important. I'm not denying that, but I think when it comes to looking at scale, what you need to kind of look at is, like, how is the macro solution going to look like for this? If I were to scale it across geographies, scale across societies and everything, how is it that going to look at a macro level? What is the solution? So it might not address the full needs of the what SHG is trying to do, but it will actually give you scale. I think it's that balance that you have to find between becoming a full comprehensive solution to that particular person versus becoming a macro solution that it can scale. I think once people figure out that macro solution, I think there are a lot of partners who are willing to kind of work with you, because that gives them scale, that gives them access. Be it as you said, a fertilizer or a seed partner or a financing partner, etc. So that balance is where some of the rural entrepreneurs need to kind of figure out how they're going to manage that.
Yeah, absolutely right.
See, SHG is a very, very rural, like you have a small group of 15 or 21 who convert, make cold pressed oil, or there is rice pulverizing. We as a MSME probably are the anchor partners for a larger footprint. So is there a dual solution? One is for the micro entrepreneur, one is for the MSME, which is at a macro level.
Yeah, so that's the thing, right? Like for example, you mentioned cold press oil, right? Obviously there's a lot of demand for cold press oil right now, that's been going on. So I think when I say macro solution is about figuring out, okay, what does the end customer want for a cold press oil, right? And how do you transfer those standards to the SHG? That if you transfer those standards to the SHG and make sure that the SHG actually develops that cold press oil in that same standards, that's the scale that you figured out. Then you can take this to a lot of SHGs, across India, and you can actually build a scalable product on that front.
Yeah, I think what is important is to have the larger vision seep into the bottom, rather than trying to understand what are the problems on the ground is important, but relating it to the top and then seeping it down might be a much more scalable solution rather than the other way around.
It is the artisan whose product should even be exported. That's the vision, right? An artisan, a unique something. Ghee is unique to India. Ghee is not available anywhere. Right? So the farmer who's producing ghee, दूध से बनाता है north में.
Right.
Easy be able to export. आज A2 गिर का बिलोना method कोई भी बना के
That's why
Two
Brothers is able to do it,
there
right?
There is so much of adulteration. The organic from the root is never exported. It's lost in the labyrinth. It's lost in the labyrinth. That is the reality.
Right.
So how do we see that the ground up approach is addressed? That is more important. Standards are something which will flow. That's not an issue. But probably the lubrication in terms of finance to connect it end to end, bottom up is what is most important. I mean, that's my view.
No,
how do we do
that's
it?
That's my ideal life
how
to
do
live.
We do it is what is most important. I mean, that is the real pertinent
I'm
question.
really sorry to interrupt you, sir. I'm seeing this is a great conversation.
Yeah,
and
we can
we
take
would
it
request
offline.
you to take it offline,
Yeah.
and we can move to the next panel.
Definitely, absolutely. Any other questions? We'll take 2 more questions before we. Yes, sir. Please go ahead.
Good afternoon to the panel. Sir, I am Vijay Shankar, faculty member, the State Cooperative Apex Bank Training Institute, Hyderabad. If you come on the road and turn your head around 360 degrees, all the activities you find, they come under MSME sector only. And most of them come under the PM Vishwakarma Yojana also. And the entrepreneurs are not aware of these schemes that are available to the banks, and banks are not coming forward to lend them. So they are going to money lenders. So the communication gap between the money lenders, what they can get from the banks, and what is the obligation of the banks, that has to be filled up. As you have already discussed the issue, the FLCs should come forward and build the gap. That's my point.
Definitely, sir. Point taken.
Definitely agree, sir. I think
I
that capacity building really needs to be done from an entrepreneur level. Absolutely agree with you.
Thank you so
Here
much.
also comes the role of incubators. The incubators who provide right mentorship.
What are the schemes available at the government banks level?
Exactly. So they
They are going to the money lenders.
money lenders. So the financial literacy part, of course, there is a lack of that. But here comes the role of incubation centers, which government is also building up. Private, you can say VCs are also building up. Ki jahan entrepreneurs can come, they can get the right mentorship. Ki that what are the government schemes, what are the eligibility of going for that scheme. For example, startup seed fund. I don't think so many of the people were initially aware of it, maybe a few years ago. But now, with right mentorship, right incubation, people are getting access to these government initiatives and also the bank schemes.
And most of these schemes are to be given collateral free.
Yes.
That also the entrepreneurs do not know it.
Okay, thank you so much. I think we've got.
I am so sorry.
Yeah,
for this
yeah, we need to
interaction, but you
leave
can
the
connect
room.
with the speakers offline.
No
and we
worries.
need to move to the next panel.
No worries at all. Thank you so much for being a great audience, and thank you, both of you, Vishal and Rhythm, for taking out time and sharing your insights. I'm sure I learned a lot, and I hope we disburse loan in 10 minutes to farmers. Hopefully, that day will come very soon. And on that note, can we have a round of applause for both the panelists, please?